Hey everyone, Rose Brown, the accountant therapist here, and welcome to part 2 of my 4-part series where I'm breaking down why you owed taxes. Now, the last video talked about the Form W-4, which, because it endured quite a bit of change over the past couple of years, folks are unaware of those changes, and because they were unaware, it caused them to owe taxes. Right, so if you've not yet seen that video, definitely check it out to make sure that's not the reason why you owed taxes. Right? And if it was, you make the necessary adjustments to ensure that 2023 does not look like 2022. With that being said, today we're talking about tax credits. In particular, child-related tax credit, and the 3 that I'll be focusing on is the child tax credit, child and dependent care credit, as well as the earned income tax credit. Now, all 3 of these credits experience a change, a generous change, if you will. You know, what the credit was before, say 2020, in 2021, it really hiked up. Whereas for 2022, it came back down to normal levels. And that's the change that a lot of folks experience, which caused them to either owe taxes or receive a reduced amount of refund. So I'm going to be breaking down the changes as they took place so that you can kind of put things in perspective for yourself, and to also make the necessary adjustments for 2023, given your 2022 circumstances, to make sure that you don't make the same mistakes or make the adjustments necessary. Keep in mind that the child tax credit is age-based. And what that means is the age of your dependent will determine whether or not you're eligible for this credit. So in 2021, quite a few changes took place, and really it was a temporary change. This was not expected to carry on, and a lot of folks were not aware that this is actually just temporary, right? So in 2021, they said if your child was under age 6, they would have been eligible for $3,600, versus if they were 6 and older, they would have been eligible for $3,000. And what they also did was they made it fully refundable. Keep in mind that in the past, this credit was never worth as much, nor was it ever fully refundable. So when we switch gears and we look at 2022, the changes here is we went back to the pre-2021 levels where the credit is back to $2,000, and it's back to only being partially refundable, which means only $1,500 of that can be received in the form of a refund. The remaining $5 is non-refundable. They also put the age limit back in place where they said, we're not doing the 6 here and 6 there anymore. If you're under age 17, you're eligible for the child tax credit, which is worth up to $2,000. Now, when we think about why you owe taxes, if your child in 2021 was 17, they would have been eligible for this $3,000. But in 2022, as they turned 18, they're actually no longer even eligible for the child tax credit. They would then move over to the other dependent credit, which is only worth $500. So you can see the changes here that may have caused you to owe or reduce the amount of refund that you're normally used to. Okay, so as we switch to the child independent care credit, you'll see that it experienced really a massive boost in the amount of expenses that were eligible to determine the amount of credit. The credit too was increased to a whole lot more than it was in the past. And also this credit became fully refundable, versus in the past, it was actually non-refundable, right? So in 2021, one eligible child could have produced a tax credit in the amount of $4,000, which was fully refundable, or if you had 2 or more children, it would have been $8,000. In comparison to 2022, which again, it's the normal level of what it was prior to 2021, one child would have caused you to be eligible for $1,050, or 2 or more children would have been $2,100. Again, non-refundable. So you can think about it this way. In 2021, you were able to get this much in the form of a credit / refund, versus 2022 was just $1,000, maybe $2,100, if that. And now things look different. You thought that, oh, maybe if I incurred more child independent care expenses, I would get more credit. That's not how this credit works, right? So with 2021, they went up to 50% of eligible expenses being deductible for the purposes of the credit, whereas for 2022, it went back to 35%, right? So moving forward for 2023, anticipate that your eligibility won't be sitting here. Okay, so we'll be back to the normal levels, which for 2023 will be somewhere near our 2022 figures here. So make the adjustments necessary so that you don't expect this when this is the reality. Finally, we have the earned income tax credit. This is the one where the folks who were really impacted were the ones who had no children, right? Isn't that interesting? Even though the earned income tax credit is oftentimes for those folks who have children with lower income, right? So if you were filing a single income tax return in 2021 and your income fell within a certain threshold, you would have been eligible for a maximum of $1,502 in credit, right? And the earned income tax credit has always been and will continue to be fully refundable. So keep that in mind. So when we compare our 2021 numbers to our 2022, which is the normal level, we're back to seeing $560 being the maximum amount of credit you would be eligible for or receive in the form of a refund. Now, any increase that any other filing status saw over the years would have been due to inflation. So every year, the earned income tax numbers increase. Earned income tax credit really increases just slightly to account for inflation. Right? So that concludes this video as we talked about part 2 of why you owe taxes. The changes that took place between 2021 and 2022 between these tax credits caused your refund to have been reduced or caused you to owe taxes. A big difference could have been the fact that your child aged out of the child tax credit and is now only eligible for the other dependent credit. That's a major difference, right? So if your child is turning 17 this year in 2023 and they were 16 last year, of course, you know that they're no longer eligible for the child tax credit, but instead the other dependent credit. Okay, so make sure you move forward, make the adjustments. And with that being said, it is indeed a buildup from the W-4 that we talked about. Because if your child is aging out of the child tax credit, you need to change your Form W-4 to reflect that you no longer have a dependent eligible for the child tax credit, but instead you have a dependent eligible for the other dependent credit, right? So that's $500 versus $2,000. It's a big difference, okay? Especially when you see the amount owed on your tax return. Well, that's all for this video. I will see you next time.